Thank you for joining us at xm.com. In this preview video, we'll be looking at the Bank of Canada policy meeting coming up on Wednesday and, of course, the outlook for the Loonie. I'm Cristina Marujos. With me today is Cristina Bartemido, investment analyst. Cristina, at the July meeting, policymakers refrained from committing to further action. However, data released since then shows that inflation remains sticky above the bank's 2% target. Therefore, what are policymakers likely to signal at this meeting?
Hi, Christina, and thank you for having me today. Investors are pretty confident that the central bank will pause rate hikes this month after having raised interest rates twice during the summer. Actually, that will not be the first time the central bank is taking a break. It also took a break back in March and April before resuming its tightening phase again. But conditions were different by then. Inflation was still slightly above 5% and way above the central bank's 1 to 3% range target, while the economy was still expected to rebound in the first quarter after poor performance in the last quarter of 2022. Moreover, major central banks in the US and Europe were hawkish during that period, signaling more rate hikes ahead with scope to pressure inflation expectations, and they were even willing to sacrifice growth in order to achieve their inflation target. Now, 6 months later, central banks are not yet at the target, of course, but encouragingly, the Bank of Canada is relatively closer to its target than the Fed and the ECB. And after such a massive tightening, the central bank is concerned about what the consequences could be in the coming quarters. The latest GDP report showed that Canada is not doing great. The economy stagnated in the second quarter, showing zero growth quarter on quarter. And judging from the latest poor business PMI figures, which entered the contraction area for the first time since January, the third quarter may not be better either. In more evidence, the labor market has been quite volatile lately as well. The unemployment rate has been increasing over the past 2 months, of course, moderately, but still that are not encouraging numbers for the economy, especially as regards future rate hikes. So I think that's the right time for the central bank to take a break and just check how the economy responds to previous increases before making its next policy move.
I see. Now, let's look at the market reaction. The Loonie has been under pressure in the latest sessions. It's also been unable to gain in the spike we've seen in oil prices recently. So how could we see it perform this week?
Indeed, the Loonie couldn't really benefit from the latest rally in oil prices, probably because of the poor domestic data and expectations the central bank could reach its terminal interest rate as soon as this month. Investors are not seeing any further rate increases during the next months, but they haven't entirely excluded the case. They're actually providing a very small probability of around 20% for another 25 basis point rate hike before the year end. On the other hand, there's also a small group of investors who believe that a rate cut could happen in 2024. So if the central bank wants to help its currency to gain ground against the US dollar, it will need to send a clear message that additional rate hikes will happen in the coming months. So given all these economic uncertainty and all the international risks as regards China and generally the rest of the world, the central bank may refrain from using strong hawkish language. It may just leave its guidance steady as the Reserve Bank of Australia did today, providing no additional explanation of why additional rate hikes will be needed. If that happens, the Loonie could extend the sell-off. Though technically, if you look at the daily chart, the US dollar is currently testing its previous highs around 1.3640 against the Canadian dollar. And there's another critical resistance zone at 1.3730. So from a technical perspective, the Loonie could still reverse some of its recent losses.
I see. Cristina, thanks so much for joining me. The Bank of Canada meets on Wednesday. This was a market preview video here at xm.com.